Hi folks, Scott here, and this is the wrap for Monday, September 3rd. Before we get started, I have a special guest presentation to lighten the mood before we get into some analysis of today's gaps and what we may have tomorrow. So now I introduce to you the world famous 7-year-old Ren Andrews playing a song that you should all know. Hit it, Ren. Bravo! First try. You nailed it. Excellent. I guarantee you there's some people smiling. That was the real thing. You nailed it. You don't even need to do it again. I was the only one that didn't do a very good job. That was excellent. Now I know you want to hear it. You want to hear it? Yep. Let me stop and then we'll start again. All right, folks. Thank you. That was that made my day, and I appreciate your patience. She was smiling from ear to ear. I don't know how she was able to play the violin, but I thought she did a great job for a new violinist. All right, today was an interesting day, and I'll admit, honestly, it caught me, say, off guard. Off guard would be too strong of a statement. But I was a little surprised that it turned out the way it turned out. Now, in the grand scheme of things, it wasn't that bearish of a day. It just started off really strong and wasn't able to follow through. So what I want to show you before I discuss any further about today are the results of fading gaps after a 5-day high close that was not a 10-day high close. Probably best to look at a cash index like the INX because they have more accurate closing prices. And today we closed right at that 1640 level, a little bit higher than last Thursday, but it was the highest close of the past 5 days. 1, 2, 3, 4, and 5, but not a 10-day high close. That was over here about 7 days ago. And when below the 50-day moving average, this blue line, it's shown some interesting results historically for the subsequent day. So let me show you those results. And there you go. So this is using an end of day stop, not something I recommend, but a good place to start your analysis. And it shows clearly, let's say, a short bias. Down gaps have done okay using an end of the day stop, average or slightly above average win rates at 75% for going long in a down gap following a 5-day high close that was not a 10-day high close. But check out the up gaps. A little bit surprisingly to me, I thought we may have more follow through, but at the gap historically, 16 of 18 have filled by the end of the session. So it is unlikely you see a sustained move to the upside on a somewhat small and admittedly small sample size without first filling the gap. So I'd call this a short bias going into tomorrow. As always, I'll rerun these numbers for our members in the morning using our MTG stop parameters to confirm the tradability of those up gaps I just showed you. All right. So let me show you what was posted over the weekend for our members. And it was some information I thought was going to be right on for today. So today we opened above Friday's highs, clearly above Friday's highs. And if you take all 8 individual gap guides for the 8 indices, really 4 indices, right? The futures and ETFs makes 8 though. There was only a 44% chance, historically speaking, of the gap filling by the end of correction. Filling today without first stopping you out using our MTG stop parameters, because these numbers do assume MTG stop parameters. Only a 44% chance and slightly profitable, but by the time you consider commissions and slippage, it's probably lost money. So not real attractive for shorting an up gap. And if you look at the one unique factor that was in play from our database, up gaps on the first trading day of a month when below the 10 above a 200, terrible. Now the good news is we talked about this at length, and quite a few of our members in the trading room on Friday went long, and either held through the day or went long at the end of the day and held through the weekend. And I did not do that, by the way. It's not my style. But this was a really good setup, and sure enough, had a nice big fat gap up and a lot of folks booked some profits. So when the data lines up as well as it did, you want to be taking advantage of it. One of those factors was our worksheet. 52 plus 8 is 60% chance of gapping up on a monster database. So that's very strong odds coupled with these odds, it's was definitely leaning towards a gap up. Now, what I didn't expect was for this gap to fill as easily as it did today. Whoops, let me go back to this. I'll show you no reason to really show you the individual gap guides because they're all averaged right here. They were a little bit mixed. There were some that had some good numbers like the Russell and some of the NASDAQ indices I think did. But first trading day of the month, as I mentioned in my weekend video wrap, that was terrible. Large up gaps in the DH zone that's above the high of a prior down day under similar market conditions. Terrible numbers there. I ran an optimization for following the gap. That means going long on a gap up. And showed targeting 50% of gap size above the open with a stop equal to 50% of gap size below the open. Had a 70% win rate at 1.6 profit factor. Now, I told folks in the trading room this wasn't quite strong enough for me, even on top of all this other bullish data, to enter out of the open. And really, I should have said it differently. It was strong enough for me to do a speculative trade long. I just decided today I'd rather wait for the 15-minute range guides to confirm the bullishness at the open. Because as I talked about in the trading room, the one scenario that was in the back of my mind is that we've been in this big downtrend. And the factors have caused the downtrend, right? The likelihood of the Fed unwinding its quantitative easing are still in play. And that being September, wouldn't be surprised to see, wouldn't be totally surprised to see the gap fall apart, fill, and maybe even tank and turn into an ugly day. Now, thankfully, that did not happen, but it did fill the gap. So I wasn't ready to get too aggressive, but I certainly wasn't going to fade the gap because they're weak overall. And significant risk factors, as I just mentioned. So, and one worthy of considering following the gap. So I said I'll wait for the open and look for long opportunities using the range guides. Well, the range guides came out. Both the 15-minute and first hour range guides came out, and they were strongly bullish. But let me show you something. See, this is the S&P here, Russell, NASDAQ futures down here in the bottom left, and then Dow. What you'll see is that I don't believe, well, the 15-minute guides did trigger on the NASDAQ to the long side. I'm not sure what they showed, but I know the ES and Russell and Dow did not trigger the high breakout. And the first hour high was the same as the 15-minute high, and that didn't trigger either. And those are also very favorable. Now, I will admit and disclose, in the spirit of transparency and promising you the good, the bad, and the ugly, that I went long in a discretionary trade pullback to the 47 level. I used a 6-point stop and was stopped out for 6 points on a small discretionary trade. Now, that's disappointing, but far beats taking a bigger size trade. And it's just, I had good data favoring the long side. I'd rather have a loser and follow my plan and get aligned in the right side, get on the right side of history, because I know over the long term that makes me money, than to just wing it. So, did a reasonable discretionary trade and was going to hold for 54 area, which was an unfilled gap. It didn't work today. Now, I did one other trade a day. I went long at just above gap fill, one tick above gap fill today, intraday, middle of the day at 33, and somehow another goofed up and used in my mind I had a 2-point stop was all I needed to get below gap fill, so I set it up to go long at 1633 with a 2-point stop, and I was stopped at 1631. One tick above the actual low of the day, so I really goofed that up. But correction, I stopped on half of it because I set it up half at 31 and half at hold on. Correction, I was stopped at 1632.75 on half the trade, and half the trade survived at 32.50, and I got +4 on that. So it ended up being a small winner, but it was disappointing. It was the right idea. There was a lot of confluence around gap fill, and this is a nice long consolidation. Just goofed up my execution on where my stops were. Because normally I'm going to try to be at least 2 points or more than 2 points beyond key areas, and I just goofed it up when I set up the order. So it cost me. Anyhow, that was my day, and that is the wrap for Tuesday, September 3rd.